So for the second half of 2025, we believe that we can close the PPX transaction, and that's going to cause a step function in our revenues, going from roughly 6,000 ounces per quarter to close to 20,000 ounces per quarter.
Talking silver here with Peter and Silver Crown Royalties. Peter, been a challenging time in the market. Some silver trading close to $30 right now, but we've got lots of news here to cover, from you taking physical silver delivery, royalty payment, and congrats on the 7th consecutive quarter of revenue growth.
Oh, thank you very much, Arne. It's relatively easy to grow from a very, very small base, but we've also grown the portfolio itself in terms of going from one royalty 2 years ago to three royalties, or two and a half royalties last year. And now we're looking at four, and there's obviously more in the pipeline. The silver price did help along the way a little bit. If we just look at the silver growth, it's gone up about 250% year on year in terms of full year as reported, and revenues were over 360% as reported year on year. So silver price did help. We're very thankful for that. That's circumstances beyond our control, obviously. The only thing that we can do is continue to add those ounces. And that's where the pipeline and the PPX transaction come into play. So we would expect, on a silver growth basis, if the silver price stays the same year on year, of another 190% year on year from 24 to 25, and another over 100% growth from 25 to 26.
And where does that leave you in terms of breaking even?
Well, we believe that if PPX closes in full and the operation is delivering as it's expected to in Q4 of this year, we should see positive free cash flow before the end of the year. We should be booking free cash flow on a consistent basis Q1 next year.
Okay, and for those listeners not familiar with the Silver Crown details on the PBX deal, could you just share some details with the audience?
Yeah, absolutely. So what this transaction is, it gets us right now 6% of silver produced from PPX's Egor 4 mine in Peru. PPX itself is a small operator, publicly traded company. That cost us $1 million US. And now we have until July to pay another $1.5 million US to get another, I guess it's 9% to get to 15% of the silver produced from that mine. Once that 15% kicks in, it's either 15% or 14,000 ounces per quarter for the next 16 quarters, whichever is higher, up to a total of 225,000 ounces. Now, this is our first capped royalty. Usually our royalties are open-ended. There may be a step down or some other provision. However, we keep usually all of them life of mine. This is the first one that we have that's got full-on cap, step down to zero. And the reason we did that, or why we were amenable to do it in this instance, was because in terms of dollar per ounce silver acquired, we're right around $10 per ounce. So this is a very high internal rate of return transaction. We estimate somewhere in the neighborhood of 50% at $28 silver. So it was very attractive in that regard, and that's why we decided to agree to a cap.
Okay, and you've also taken delivery of physical silver into a secure vault, 1,000 ounces. What are the details of the story there?
No, that's correct, Arne. I mean, people would invest in a silver royalty company if it's being paid in silver. Now, as royalty companies, we get paid in cash. So we essentially synthesize the payment in silver by buying silver in the market that is equivalent. In fact, it's a little bit less than what we received specifically from PPX's Egor 4. We turned some of that cash into silver, and that's going to sit on our balance sheet as working capital. So this is really a conversion of some of the revenues that came back to us in dollar terms, sitting on our balance sheet in cash. We converted that into silver ounces, which is what we would believe investors in Silver Crown would expect. As a silver royalty company, you're getting paid in silver. And we actually managed to fortunately get it at a discount. And because of the correction that we just saw in the last week or so, we actually paid, I think, 10% more or less from the recent highs, or on a 20-day VWAP basis.
Yeah, and talking about correction, SCRI ticker symbol is currently trading at 5.75 Canadian dollars, which is down from the terms and the private placement that you recently did at $6.50. We obviously have very challenging market conditions. So what's the outlook for second half of 2025?
Yeah, so for the second half of 2025, we believe that we can close the PPX transaction, and that's going to cause a step function in our revenues, going from roughly 6,000 ounces per quarter to close to 20,000 ounces per quarter. Once that happens, knocking on wood, if that happens, our revenue profile obviously should step up commensurately. And if we stay trading at around 15 to 20 times sales, well, you can read into that what you wish in terms of what the share price performance should be. If we look at comps, and we started to include a comparable table in our presentation, so that's online. If you start looking out in 25, 26, you can see what the other royalty companies that do have revenues, that do generate cash flow, what multiples they trade on. And if we were to trade similar to those multiples, you can read into what that would mean for the share price. I will argue that we are at a discount here based on what the future growth profile could look like. In terms of historically speaking, I think that this is more or less the low, or the lower bound of the range where we should be trading. So even if we start discounting Q1 performance, and we do have some markers here, we did announce payment from PPX. Again, this transaction that we're working on now in 2 stages. So the first stage already paid us. That's the conversion into silver as well. And they did so early. If we include that, we're looking at about 6,300, 6,400 ounces for Q1, which is a sequential increase again from the 5,500 ounces in Q4. But if we start to discount that, then the share price should be closer to $657.
And looking at Europe, of course, dividends, very, very interesting for many investors here. What kind of dividend ratio, dividend payout are we going to expect for 2026?
I mean, hypothetically speaking, and this is, all the various
Forward-looking
statements
statement,
need to
yes.
be said about this exactly. So there's a lot of ifs and a lot of non-guarantees, obviously. But if PPX does deliver, if that transaction closes, and we do on an annualized basis 78,000 ounces silver next year at $28, we should be able to do somewhere in the neighborhood of $2 million Canadian in free cash flow. Assuming the PPX transaction closes in full, that will give us 3 million shares outstanding basic. So that's about 66 cents per share on a free cash flow basis. Now, I did mention comps before. They trade somewhere around 20 times free cash flow, so about 5% free cash flow yield. We would be, myself personally, I would like to push for a higher dividend payout ratio than 50%. So if we look at, 80, 90% dividend payout ratio, then that would yield somewhere in the neighborhood of 50 to 60 cents per share in terms of dividends. And as you mentioned, we're trading at 575 right now. So that's about 8 to 10% dividend yield. Again, based on all these various assumptions and forward-looking statements, etc. But that is personally what I would very much like to see is that kind of dividend payout run rate.
Okay, Peter, exciting upside, and any other royalty deals that are still planned apart from what we already discussed for the second half of 25?
There's always something going on, Arne. Unfortunately, I can't really speak to it until we sign definitive agreements, because even letters of intent, we've seen those fall apart in the past. So we tend not to advertise those too much. And even definitive agreements, look, it takes 2 to tango, and sometimes for whatever reasons, the other party, or maybe even us, maybe there's something that comes into play that makes us aware of a situation that we don't want to get involved with. Until the deal is closed, we don't want to speak to it. But at any given point, obviously, we're scouring the landscape always, Arne, and we are always looking for additional opportunities to keep growing the company, hopefully at the same rate that we've seen from 23 to 24 and 24 to 25. And again, into next year, we're hoping to keep replicating that going forward until we get from the nano cap size to the micro cap, and then to the more regular sized companies.
Exciting times, and we are invested. I am invested. So Peter, fingers crossed, and looking forward to those dividends in 2026.
Thank you, Arne.